Pick the right stock at the right time.
Good afternoon to all our viewers. You're watching Countdown right here on Bloomberg Quint, and it's a complete change from what we started off the day with. The Nifty as well as the Sensex now sharply in the red by more than 0.5% apiece. We'll talk about the internals of the market also in just a few moments, but run you through the headlines in the time being. After trading in range for most parts of the day, the Nifty trades near the lowest point of the day. The IT index is the only sectoral gainer. Oil prices are staging a rebound after Bloomberg quotes the Saudi oil minister saying that there may be a need to cut production by 1 million barrels per day. Titan is the top gainer on the Nifty after its second quarter earnings. The management expects festive and wedding sales to aid the third quarter. And Coal India along with Eicher Motors are the two Nifty companies scheduled to report numbers today. Good afternoon, Neeraj. Complete sea change from what we started off the day with. It looked relatively peaceful and relatively strong, and now we're at the lowest point of the day.
And actually the Asian markets did the reverse, to be honest, because I think midway through trade, the Asian markets which are trading in the red started off trading in the green. But just bring up the world picture once before we talk about what's happening to our market internals as well. We're down about 0.66%. Look at what the European markets are doing. If we can also bring up what the Asian pack did in the trade today, and then bring up what the Dow futures are doing. So Europe is trading fairly okay. This is what the Asian pack looked like, and as I said, they were in the green when at about 8:15 a.m. and now, I mean, at close, the Asian markets had a fair bit of green on the screen. The Dow future should next come up on your screen, and the world seems to be an okay place, to be honest. Again, a mild bit of green on the Dow futures as well, but we have succumbed to some bit of selling pressure in today's session, led by banks, PSU banks in particular, but banks by and large have come off, and which is why the Nifty bank is trading about 200 points lower. Bring up the heat map and show you what's happening, and then of course we'll talk about the broader markets and what's happening in the F&O space as well. A stark contrast, right? We had about 3.5 rows of green and about 1.5 rows of red. Now we have 4 rows of red and just a row of green. Technology and Titan, two pockets that are doing well. So Tech Mahindra, HCL Tech, TCS, Infosys, this whole clutch of IT names are doing rather well for themselves. Kotak Bank has some gains, and Titan, I remember a conversation with Agam in the morning, but when we spoke about how brokerages were saying that what happened in the quarter was probably a bit of a one-off. It did not last into the quarters ahead. Maybe the market is taking cognizance of that. But then look at the losing end. Oil marketing companies giving up almost all of the gains that they had in Friday's session, primarily because of those voices of crude output cut. Tata Motors under a bit of a cloud, and from amongst the heavyweights which are correcting today, some NBFC names are in the red and some auto names are in the red. So all of that is putting a little bit of cloud at the top end of the market. But the mid caps and the small caps, Devina, selective gains out there, but I believe that the mood should be not somber really, but a bit suspect.
Well, few pockets actually are doing really well, surprisingly well, and we'll come to that. But sugar as a space is really active in today's session, and a few names thereabouts on the back of, definitively good numbers are doing well. So a stock like a BGR Energy is one to watch out for. It's on 17, almost 18% gains this morning. Wockhardt is the one that's been gaining from strength to strength right from the word go. And you have a Premier Explosives. They've just recently got a license, and that is driving up the stock 15-odd%. Sugar stocks, like we said, most of them active and buzzing about in trade. The likes of Dalmia Bharat Sugars up 11%, Triveni Engineering 10%, Balrampur Chini, a lot of them are extremely active and heavy volumes on all of them. Earnings impact, some of the negative counters that we saw. You had the likes of an Avanti Feed, which loses 10% in today's session. Disappointing numbers. BS Distilleries 9% given up, and a Shankara Building Products is down about 5.5%. Volume stocks, Varun Beverages, 66 lakh shares traded. The stock's up 4%. You've got a Praj Industries in line with the sugar theme is up as well with 25 lakh shares traded. On the downside, you have an Oriental Bank of Commerce which loses 8.5% with about 77 lakh shares traded on this one. But let's tell you what's active and what's moving around in the futures and options space. And for that, Agam is joining in this afternoon. Agam, good afternoon.
Good afternoon, Devina. What we're seeing at this point in time is a little more weakness seeping in, and we've seen that gradual weakness come through for the benchmark indices. Starting off with the Nifty, you are seeing a little bit of an increase in open interest of as much as 4% towards the futures, and it's the same for the Nifty banking futures as well, where we're seeing some amount of weakness, and the banking Nifty futures, but we're not seeing as much of accumulation in open interest. In fact, there's a little bit of unwinding coming through. The India VIX, however, has surged by as much as 9%, back above the mark of 19. In terms of open interest distribution, what we're actually looking is in turn, not too much change with respect to levels, though we have seen a little more accumulation towards the 10,700 call. And let's pull up where the most active options are, and we are seeing 10,700 and 10,600 calls with the most amount of writing, considering the fact that we have seen declines on the indices. Coming down to your stocks, let's talk about Wockhardt because it is advancing and we're seeing fresh longs. Repco Home Finance is the other one, again on the gaining end. That's also up and about, and substantial longs building in. MGL is the next one. We have longs building in there as well. And Tata LC on the losing end, however, is seeing some amount of pressure even as the stock moves below the mark of 1,000 rupees per share with the 16% increase in open interest. So mixed cues coming in with the benchmark indices seeing weakness in today's day of trade.
All right, Agam, we'll leave it at that. Thanks very much for joining us with an update on what's been happening in the futures and options space. Well, let's begin the week with a global voice. We've got Nick Parsons of the Thomson Lloyd Group. He's joining us on the show right now. Nick, thanks very much for taking out the time. Good afternoon from India. Let's start off first with what's been happening in particular to crude oil and the sharp correction thereof that we've seen entered the bear market for the Brent crude. Now we've seen a little bit of a comeback. But nonetheless, is this going to be a catalyst for a pickup in the emerging markets?
Well, good morning from London. I think the falling crude prices is undoubtedly helpful for EM. Certainly it's going to improve some of the macro numbers around balance of payments for many countries in Asia and Southeast Asia. But I think set against that is we're going to see further increases in the value of the US dollar, further rises in US interest rates as soon as next month, and I think that's going to offset the boost that oil is giving. So we saw until the middle of last week 10 consecutive daily declines for oil prices. We've never seen that before, and I think the worry has got to be that it hasn't really been the catalyst for a bigger rally than the one we've already seen in emerging market equities. So I'm concerned that they didn't rally further on that news. I'm very concerned that the strength of the dollar is going to offset the good news on oil prices, and I think there's a very real risk that we'll be heading down towards testing the October lows once again.
You know, a Bloomberg study showed that the correlation between oil and emerging market currencies has seen a pickup since the month of September. How do you read into that, considering that, at least the Indian rupee doesn't seem to have strengthened all that much, even though the fall in the crude has been fairly significant?
Well, the rupee has rallied somewhat. It almost touched 75 to the US dollar, and we've recently been in the high 72s, the mid 73 area. I think that's been helpful. for the equity market overall, but I'm very much concerned that the rise in interest rates that we're seeing in the US, well, we've got 2-year yields at 2.97, which is the highest since before the GFC, that rise in interest rates, that increase in the value of the dollar is going to continue to pressure. And I think one of the other correlations that we've got to bear in mind is that between the EM equity markets as a whole, and we can proxy that with the MSCI index. So if you look at the MSCI Emerging Markets Index, overlay that with the index of emerging market currencies, and we can see the two moving tick for tick almost on a daily basis. And I think that with the dollar pressing today into fresh highs for 2018, that is going to cap any rally that we're seeing in EM stocks, and I fear that we're going to be heading once more down to the downside.
Would we, Nick, good morning to you. Do you reckon that the chances are that we might actually extend ourselves further from those October lows as well?
I'm sorry, could you repeat that question, please?
I was asking you if you believe that it won't be just a testing of the October lows, but a slide which could be even lower than the October lows.
Well, that would be the risk. I mean, if we see, I think we'll see the Nifty below 10,000 once again. It only traded there, I think, on 2 days in October and rallied back quite sharply. So we had a 6.5–7% rally off those lows. I think we're going to go back down and test them, and then we'll have to look at what the outlook for corporate earnings is and whether or not we've got any comments about the US dollar from President Trump, because I think we can be fairly confident that going into the December FOMC meeting that he'll be trying to exert some kind of pressure on the Fed chairman, and even if he's unlikely to get his way on interest rates, we might see a bit of a cranking up of rhetoric about the US dollar from the White House. Now, if that were to materialize, I think that might come to the rescue of EM if we are indeed testing those October lows at the time. But I think it's going to be a very interesting conjuncture of events in the run-up to that December FOMC meeting. But I find it difficult to believe that we're going to get from here to mid-December without a test of those October lows.
Interesting. Nick, would you reckon that countries with certain internal fragilities or events that could bring back volatility would be at a higher risk? India, for example, while you're talking about hitting those October lows, also has this risk of heightened volatility due to crucial elections within the different states that come in the second week of December. Would that only add to the volatility?
Yes, I mean, there are idiosyncratic pressures everywhere, and I think what we've got to be wary of is countries where specific individual local factors can amplify the volatility that's seen from more global macro trends. So I certainly think that there is a risk of heightened volatility from those type of events. Yeah. But overall, the EM is going lower.
No, Nick, sorry, if I can intervene. Sorry, what I meant was that yes, idiosyncratic events would have an impact, but are people sitting outside India laying a lot of emphasis on these state elections? Are you, for example, hearing a lot of rhetoric about the impact that these state elections would have on the Indian markets?
Well, the short answer from London is very little indeed. There doesn't seem to be a great focus on the state elections. There are worries about how the political scene might play out in the bigger picture for 2019. But we're hearing very little talk locally about what's happening in the state elections. In London and through continental Europe, the emphasis is very much still on Italy, on Germany, on the UK and on the United States. This is not something which is yet on the investor radar, and to the extent that you are raising it as a possibility does suggest that there is still perhaps a wake-up call to come still for investors in Europe who are looking at Indian markets.
A follow-up to that then, any word on the street regarding fund allocations picking up towards India, or that probably will be taken up much later once there is more clarity about the elections and by the end of the year or probably even later?
Well, I think from a fund allocation perspective, one of the things that has been most concerning for investment managers has been the weakness of Asian currencies. Now, the two weakest that we've seen this year, the Indian rupee and the Philippine peso, they've been the two softest amongst all the Asian EM currencies. I think the Philippine peso is probably the worst, may well be behind it, and we'll see what the central bank has got to say at its meeting on Thursday this week. But for India, I think investors really want to see a turn in the currency before they decide to increase allocations. Now, we almost touched 75 on dollar rupee, as I mentioned earlier, but I think they would want to see a substantial and sustained move lower before they begin to increase allocation towards equity and other asset markets. So for me, the currency is the big driver, and unless and until we can become a little more confident that the rupee has actually bottomed out, then I don't see any great move to increasing exposures at the moment.
All right, Nick, we'll leave it at that. Thanks very much for joining us. Appreciate you taking out the time and sharing those thoughts with us here on the show. That's Nick Parsons there of the Lloyd Group. We're talking a lot about what's been happening globally and what's India's view from an external standpoint. On to some macro data points which India will be reporting. We've got the consumer price inflation data for the month of October out today. A Bloomberg poll of 30 economists is projecting October's CPI to be at about 3.6%. The CPI figure will be the lowest since October last year. Industrial production, however, is likely to be flat on a month-on-month basis at 4.3%. In tune with the 4.3% last time around. Let's discuss this in greater detail with Aditi Nair. She is the principal economist at ICRA. Aditi, thanks very much for taking out the time. How crucial and important are these numbers today?
See, these numbers are certainly going to be watched very carefully because we're going to get a sense of how things are now going to start moving in the festive months or in the run-up to the festive months. And particularly the CPI print is going to be quite important given the fact that it's the last print we're going to get before the next policy. And of course, things have changed quite rapidly in terms of the lead indicators going into the policy, particularly in terms of what we have to accept from the global markets in terms of crude oil prices and the rupee. You know, that's certainly going to play into our forecasts of what the MPC is likely to do in a few weeks from now. Our forecasts at ICRA are a little different from what you just mentioned. We expect that CPI inflation may actually inch up slightly just to that 4% mark, which is the midpoint of the band for the MPC. And we're expecting a slight uptick in the IIP growth to around 4.8% for the month of September. Primarily because of a favorable base effect that may outweigh some of the clear negatives that we have in terms of the contraction in non-oil merchandise exports, as well as the dip in the core sector data and the lingering impact of floods which is there on production in parts of the country. So a slight difference in terms of our forecast versus the consensus that you mentioned over there, but overall not a dramatically different view that we have.
What about you know, the fact that you might see a play up of the currency depreciation in these numbers?
Right. So, you know, in fact, when we break down our forecast for the CPI inflation in terms of food products, we think that there might be a marginal uptick in food inflation. Nothing, again, like I said, nothing very dramatic, but the sense we have is that the overall food inflation number would be slightly higher for October than what it was for September, while remaining below 1.5%. And there would be an increase in fuel prices and also a pass-through of higher commodity prices into miscellaneous, you know, into the miscellaneous basket, particularly, which has a lot of auto products in it as well. And there we find that metal prices are likely to push up along with the fuel price increase in terms of the miscellaneous inflation. On the other hand, we'll continue to get a pull down in the housing inflation numbers as we've been seeing in the last few months. So net we may have a slightly lower core CPI inflation number in October than what we had for September, but the headline number may be a little bit higher. And of course, since then, with the rupee depreciation impact coming off, and fuel prices having come off significantly from the worrying levels that we had a few weeks back, the outlook for the inflation trajectory now is going to hinge also quite sharply on what is going to happen in terms of the agri side. So we've had a pretty bad post-monsoon season so far, in terms of the rainfall that we've actually received. The deficit is around 50% or so. That's not a very good sign. Reservoirs are now tracking in line with last year's level after having been a fair bit higher in the August-September period. And the impact of MSPs on food prices, we're still going to be watching for how much the MSP and the PM Asha scheme are really able to pull up market prices here on out. And that's clearly going to be very important for the food inflation trajectory. Fiscal risks, of course, are still there, although not necessary that there will be a large fiscal slippage this year. Markets will be watching out for that as well. Net, as of now, I would imagine that there is a fairly low likelihood that we're going to get a rate hike in the December policy, despite the fact that the stance was changed last year. And that's really coming from the fact that a lot of the concerns which had built up on the rupee and on crude prices have eased quite significantly in the last couple of weeks.
True. Let's talk about the IIP numbers as well, and an area of growth and an area of concern within the IIP numbers for you.
So within the IIP numbers, I think one thing that I always kind of keep in mind during the festive months is that even a couple of weeks shift in the festive season can have an impact on the production schedules. And this year Diwali was a little bit late, so the entire festive season was late by a couple of weeks as compared to last year, and therefore we're seeing the early numbers for October are a lot better than the numbers that we have for September. So as always, my gut says that we need to average out the September and October numbers. So even if we get a slightly disappointing September number, I think we need to see it in the context of the fact that a lot of our early lead indicators are signaling significantly better YOY growth in October than they are in November. Overall, given the base effects and given these production disruptions related to the festive season, I think we shouldn't look too much at the individual numbers for the month of September, and rather look at the average of the individual as well as the headline numbers for September and October.
Aditi, one last question. We have the WPI numbers coming out on the 14th. Last time around, we had crossed that 5% mark. This time around, expectations are somewhere close to 4.6%. What's your reading?
Our view is that the WPI number is going to accelerate further because for the month of October, in terms of the impact of fuel prices, the ATF revision, the rupee depreciation as well, I think these things are going to play a big factor in pushing up the headline or WPI number in the month of October, and then we may see a little bit of a pullback in November given the reversal of some of those trends that we've seen so far. We also had a big increase in food prices in the September WPI, which is part of the reason that we do think that food inflation is going to be a little, tick a little bit higher on the retail side in the October numbers. So it'll be interesting to see whether the uptick that we saw in food prices in the WPI in September actually continues into October. Overall, again, it's going to be a matter of the October numbers showing some stress because of the rupee and the crude oil prices, which we expect would partly reverse in November, although at the same time we may get some transient impact of the festive season itself pushing up prices of some perishables, etc., which would then again go back into the seasonal slack prices that we typically see in the winter months. So lots of little kind of nudges here and there in terms of the impact of different factors on the WPI and the CPI numbers, but overall I do expect that we're going to get an uptick in both in the month of October.
Got that. Aditi, it was great chatting with you. Thanks very much for joining us. Appreciate you taking out the time and sharing those thoughts on the show with us. That's Aditi Nair talking about the expected CPI and IIP numbers today and WPI numbers which come out on the 14th. A quick glance at the market once again. So we are down closer to the lowest point of the day, about 0.7% given up on the indices. Not much happening, in fact, making a steep and fast approach towards 10,500.
Well, let's take a look at what fund houses have done across the last month to rejig their portfolios. Aditya Birla Sun Life Mutual Fund has increased stake in 2 large corporate-focused banks, while it has sold complete stake in a couple of other volatile stocks. And then, of course, we'll also talk about the other AMCs. But let's start off with Aditya Birla Mutual Fund, the 3rd largest AMC. Yash Upadhyay is here with the details. Yash.
Good afternoon, Neeraj. So it was a busy month for actually all the top 3 fund houses. When it comes to Aditya Birla Sun Life Mutual Fund, let's take a look at which are the stocks wherein they have increased their holding. And as you rightly mentioned, financials dominate this list. So SBI is where they have bought in close to 3 crore shares, followed by Axis Bank and ICICI Bank, both of which wherein they have acquired close to 60 lakh shares each. ITC and Tata Power round up the list of the top 5 names wherein they have increased their holding. The ones that they have reduced their holding to is, well, Yes Bank, wherein they have sold close to 3.5 crore shares. Federal Bank, 60 lakh shares gone there, along with HPCL, GMR Infra and L&T Finance Holdings, all of which seeing big drawdowns over the last 1 month. What makes it to their list for the very first time, that is an interesting list that should come up as well. So Just Dial, that enters their portfolio for the first time there. They have bought in close to 1.7 lakh shares, along with HEG as well as Interglobe Aviation. What goes out completely is the likes of Infibeam, Diwan Housing and PC Jewelers. So they've completely removed them from their portfolio, along with BHEL and Jindal Saw, seeing cuts of almost 20 lakh shares over the month gone by.
All right. So Yash, going by the previous one where there was a decrease in HPCL, the complete opposite for HDFC AMC. They seem to have increased HPCL this time around.
Right, so it was basically a month dominated by energy and industrials for HDFC Mutual Fund, wherein Coal India is the top stock they have increased their holding in. So about 3 crore shares they've added there, along with the 2 oil marketing companies as well. So BPCL, HPCL, they've bought shares there as well. So 2.8 crore shares they've acquired in Coal India, along with 2.25 crores in HPCL and 1 crore shares in BPCL, along with Indian Hotels and NTPC rounding up the list of top 5. Auto stocks is one space where they have reduced their exposure. So Tata Motors close to 30 lakh shares that they've sold, along with Ashok Leyland where they've sold about 21 lakh shares. BHEL, Infosys and Ambuja Cement, there too they have reduced their holding. But they have also gotten some new buys for the first time. Garden Reach Shipbuilders, their IPO, they had subscribed to it, and close to 42 lakh shares is what they've got, along with Gabriel India, the auto ancillary name, 7.5 lakh shares there, along with Repco Home Finance and Ircon International. But what goes out completely again is the financials which dominate. So Manappuram Finance about 34 lakh shares, and HDFC Standard Life Insurance 14 lakh shares sold there, along with Nalco, Sun TV and Bharat Forge, all 5 of which make their exit out of their portfolio.
Interesting. What about the largest one, ICICI Prudential? And I'm guessing that's bet big on a bunch of stocks, including Coal India.
Right, so there too we are seeing a bit of a similarity with HDFC Mutual Fund. So industrials and energy is something that they too have bought into in the month gone by. Coal India, they've bought close to 3.8 crore shares, along with Indian Oil, wherein they've got they've added 2 crore shares in the company. Bharti Airtel is a surprise, close to 4 crore shares added there, along with Bank of Baroda and Ambuja Cements. Where they reduced their holdings is actually in NTPC, ONGC, BHEL, all of which wherein they have sold over 1 crore shares. And Wipro and ICICI Bank make up for the top 5 names wherein they have reduced their holding. No substantial new buys or stocks which they have completely exited. So that's what is there when it comes to ICICI Pru.
Thanks a lot for that, Yash. So 3 big fund houses and the kind of portfolio rejigs that we've seen in the month of October to keep an eye out for. You can get that entire information on our website as well. Let's get down to our market guest then. Hemen Kapadia of KRChoksey is joining us on the show right now. Along with him, we've got Sumeet Bagadia as well on the technical side. And taking us through some fundamental cues is Avinash Gorakshakar of Joindre Capital Services. He's also here with us on the show. Good afternoon, gentlemen. Hemen, I'll start off with you with regards to the index setup and what should one do from here.
I don't think Hemen can hear us.
All right, Sumeet, what about you?
Hi, good afternoon. Well, I think our index has given a good correction from higher levels, and now from here on, 10,500 is a support for index. I think till the time these levels are not taken away, it's better to avoid fresh selling at these levels. One can take a chance by taking long positions in Nifty at the current market price with a strict stop loss to be placed at 10,500 levels on lower side. That should be the strict stop loss, because if by chance the levels are taken away, then there is a possibility that we might see a fall in the index by 100 or 150 points. So 10,500 should be the strict stop loss for long positions. And on high side, we can see a pullback or bounce back move till 10,600 levels. Once 10,600 is taken away, then we will see an extended move till 10,650, 10,700 levels. Overall, the bias for Nifty looks positive to me. I think if there is a correction seen from present levels, then that should be used as a buying opportunity. So one can initiate long positions at the current market price. On the other side, Bank Nifty also, it's a support at around 25,500 levels. So till the time 25,500 levels are not taken away, it's better to initiate long positions in Bank Nifty at the current market price. The risk reward ratio is in favorable of bulls at the current levels, and on high side we can see a move till 25,900, 26,000 levels. Once these levels are taken away, we will see extended move. Immediately, for a very short-term trading perspective, one can initiate long positions in Nifty and Bank Nifty.
Okay, Hemen, good afternoon to you. And how are you approaching trade today? There's a mild bit of a pullback that we have in our markets.
A very good afternoon to you, Neeraj. I think we seem to be mildly corrective. Overall, we are corrective. We are retracing the fall from 11,800 to 10,000. We've walked into 10.6. We made heavy weather over there. So I think we could stagnate a bit, consolidate over here before we make a serious attempt at taking out 10,600. But all in all, even if you go to 10,750, it still seems more like a pullback. So I would have a strangle, Neeraj. I'd sell the 10,300 put and 10,800 call.
Okay, what about specific stocks? Hemen, I'll stick to you only. What are the stock recommendations for this afternoon?
I think UPL is the easier one. I would have a sell on UPL at 736, stop loss 744, target 720. And I would also have a sell call on RBL Bank at 542, stop loss 548, target 530. Both sell calls, both have had run-ups, both are corrective. RBL is on the verge of giving a downward bar reversal today. UPL is giving a downward key reversal today.
Sumeet, what about your stock ideas?
I have two stocks for the day. The one is on buy side, that is Kotak Bank. Kotak Bank is looking good to me. I think after correction, now Kotak Bank is showing signs of reversal, and from here on we can see a move till 200 DMA levels, that is 1195. And the second target would be 1210. So I think one can initiate long positions in Kotak Bank at the current market price, with a small stop loss to be placed at 1140 levels on lower side for the upside target of 1195 and 1210 levels. The second stock for the day is Infratel, and that is on sell side. One can initiate sell positions in Infratel at the current market price. If there is a bounce back or pullback till 265 levels or 263, 265 levels, then that should be used as a selling opportunity. Strict stop loss should be placed at around 265 levels for the downside target of 240 levels. Overall, the structure is looking weak, and in last couple of months, what we have seen is selling pressure at higher levels. Now today also, we have seen that the red candle has formed and is showing signs of weakness. I think immediately we can see levels of around 235, 240 as a target for this stock, and on high side, stop loss should be placed at around 265 levels.
Okay, let's talk about fundamentals, and firstly talk about the stock that is really moving on the index, Titan. It reported the lowest profit growth in over 2.5 years, but I remember a conversation with Agam in the morning on First Word, wherein he mentioned that it might be viewed as one-offs if indeed brokerage notes were to be believed, and from the reaction it certainly seems like, Agam, it has been viewed as a one-off because the stock is up about 5% on fairly high volumes as well. What's happening here with Titan?
Well, Neeraj, it's certain that there is not a single note that I've read since morning which has downgraded the stock, or for that matter cut its target price on Titan, despite the fact that we've seen weakness in its operational numbers, and that is essentially because of, well, rather I would say one-offs. Now, with respect to its top line, about 26% growth coming in, which is ahead of consensus at 4,400 crores when it comes to standalone numbers, and we have seen your profits rise 3%, but but that's largely on account of the fact that we saw margins come off. The reason why we've seen margins come off is, one, because of lower gross margins owing to a higher share of plain jewelry. Two, inventory losses taken worth 18 crores for this quarter, which will be reversed in the next quarter. And three, provisions made for its exposure to Ireland FS worth 29 crores made for this particular quarter. But if you leave these issues aside, otherwise on an operational basis, we're seeing strength come through. And in fact, on an adjusted level, your EBITDA is actually very much in line with our expectations. So if you disregard all these one-off events, we're actually looking at a very healthy quarter for Titan. And that's the reason why a lot of these brokerage notes have, well, not downgraded the company, neither have they cut price targets. And that's possibly also the reason why the stock is trending higher and at this point in time the top gainer on the Nifty 50.
Right, Agam, thanks very much for that. So that's 889 on the stock of Titan. Markets disregarding those one-offs and giving it a thumbs up on its earnings. Avinash Gorakshakar is here with us of Joindre Capital. Avinash, your take on Titan?
I think numbers were definitely in line as far as the top line was concerned, Divina. I think all the three businesses reported a very strong double-digit revenue growth. However, margins definitely were slight disappointing. I think the EBITDA growth of just 5% was slightly below expectations, but the management commentary post the results was quite strong. And hopefully, you know, if one were to remove the one-offs, then I think these numbers definitely were in line. I would believe that except for maybe the ILFS issue also, which is not a very large issue, the total exposure is about 130 odd crores. So I would believe that, you know, the markets are quite happy that top line growth has been much better than what the street expected, and hopefully over the next 1 or 2 quarters margin improvement should also come in.
You know, what's not done well today amongst names, and there are 2 or 3 of these mid-sized names which are looking slightly wobbly today. One of them is VST Tillers, the other one is Shankara Building Products. Both of them have come off and come off quite rapidly. Volumes may not look very thick on Shankara Building, VST Tillers, but it is much higher than the average as well. Firstly, VST, and Avinash, I mean, not the segment where you would expect margin erosion or EBITDA erosion to happen in such a big way. What went wrong here?
No, I think clearly my sense is I think probably the volume push you know, was not entirely up to the company's expectations. And I think you know, if you look at the numbers till last year, they reported a very robust profit of almost 111 crores on an equity of 8 crores. I think the first half performance has been quite disappointing. I think Neeraj, it would be safe to assume that probably this year would be a little troublesome year for them, considering that, you know, this is a peak season for tillers, and considering the fact that although the tiller market is significantly smaller than the tractor market, the base is still small, but one has to consider the fact that commodity prices have risen. They probably have taken some price hikes, but overall I think the profit number is definitely going to be much below last year, and that's what, you know, the stock price is depicting. I think probably earnings growth this year could be quite negative, and hopefully, you know, recovery could happen only from FY20 onwards. The next 2 quarters could equally be similar like the first half.
Interesting. The numbers though, not that great. 1600 is where that stock is trading. I agree the volumes aren't the best, but it's a stock that's certainly taken it on the chin today. You know, the other set of stocks which have completely gone off today are all marketing companies. It just shows the fragile nature of these space, right? I mean, one whiff of there being a production cut and the outside chance that crude prices might again come back and move higher, and the stocks have been taken off the buy list completely. In Friday's session, the top gainers, HP, BP, IOC. In today's session, HPCL is the top loser and IOC too, not too far behind, 3% lower. Does it make buying into these companies very difficult, Avinash?
I think,
the volatile nature?
I think, Neeraj, the business itself is now very volatile, and it's very difficult to predict what way the crude price movement would be. But I think clearly, you know, I think looking at the fact that, you know, OPEC is talking about supply cuts in the coming few months, I would believe that it would be wise enough to stay away from the oil marketing companies and probably look at upstream plays like Reliance, or for that reason even a ONGC or Oil India. I think these are much better, safer bets compared to the oil marketing companies, where possibly, you know, crude price volatility is going to actually impact their GRMs quite badly.
Okay, interesting. What else today? I think the other crude impact companies, the likes of aviation stocks, etc., are all in soft in the session. Jet Airways, for example, is down about 3.5%, and a couple of other stocks too grinding under pressure today. I don't know if you covered some of these stocks, Hemen, in your list of names, but an HPCL or a Jet Airways, two of the most liquid names which get impacted by crude. Is there a trade in either of them?
I think if you can give me a couple of minutes, I think crude is oversold. We saw a fall from 87 to 69 odd, Neeraj, and we are looking at a bounce. But our small interesting observation, crude has been on a tear since $27 way back in 2016 odd. I have a feeling if these levels remain at the end of the month, crude would have ended that move. This bounce could take it to 75 or maybe 77 sometime this month. But if that is the case, then crude highs that we saw at $87 Brent would probably not be seen for the next few months at least. The monthly MACD is on the verge of giving a sell, Neeraj. I'm saying on the verge because the month is not yet over. We need this at the end of the month. But if that is the case, after 2.5 years, if the monthly MACD gives a sell, the crude move has halted for the time being. I'm not saying it won't bounce back. So coming back to your main question in terms of HPCL, I guess I think despite what's happening in crude, HPCL 1, the downside appears limited. 2, we posted an intermediate bottom. 3, we're looking at a corrective bounce, which may or may not be over. So coming back to your main question, would it be a trade? It wouldn't be a short, definitely. A trade, maybe. In terms of Jet Airways, it's 880, 160. We walked into resistance at 270. So we've already had a 100-point move. So I'd wait for a 30-40 point decline before going long. So currently no trade, but I wouldn't short any of these because they are retracing or recovering from multi-month decline. So I have a feeling the downside could be capped and maybe the bounce is not yet over.
One pocket that's extremely active this afternoon is the sugar space. You've got all of them in gains in excess of 5%. So Dalmia Bharat, obviously double-digit gains, they're 14%. But if you pick up a Balrampur Chini, Adhampur Sugar, Mavana Sugar, any of these names, even a Praj Industries doing extremely well in today's session. Mavana is up about 5% in the trade. Volatile to say because you've got one day where you have most of these stocks giving you such kind of returns and the next day probably profit taking comes in and money goes out of these names. Avinash, how would you read into this pocket? I mean, while obviously the announcements around ethanol are definitely positive, but if one is building a long-term portfolio to decide that I want a sugar name in it, how does one do that?
No, I think it's better to stick to integrated players, like Balrampur Chini or maybe a Dhampur Sugar. Pure standalone sugar companies may not benefit, and I think the ethanol move is definitely going to benefit these companies at least from probably the fourth quarter of FY19 and FY20. Clearly, because ethanol is now going to make significantly more money for the sugar companies. More importantly, the core business of sugar, Avinash, should do well. I think sugar shortages are clearly evident, and probably that is the reason I would believe that prices would also improve. So clearly, I think integrated players could be a better choice. Although this player is a very difficult sector to track, considering the fact that price is something which is very tricky. I mean, sugar prices are definitely in the prerogative of the government regulation. So any move from the government could also possibly play some sort of a spoil sport.
I must say, Devina, though, that the other bit, and we've been talking about ethanol, the proposed timeline, estimated timeline for the capacities to come on stream for a lot of these names. For Dhampur, their post-expansion capacity of about 400 kiloliters per day of ethanol, it gets commenced in November. So would have been commenced or will get commenced by the end of the next 15 days. And the tenders are already out. So for a company like Dhampur, the additional revenue that comes in from ethanol at a higher price commences from this quarter itself. So it shows in this year's earnings. For a lot of others, in DCM Shriram, for example, the estimated timeline is 19th November. Balrampur itself is December 2019. Triveni, it comes in March 2020. So in that sense, a bit of a delay for some of those. But for certain companies like Dhampur and others, the capacity addition is immediate, and therefore the revenues.
And how much are they doing it by?
Well, so Dhampur had about 300 KLPD. They're adding another 100 KLPD.
Okay. But
the point being, so at a point of time when we're talking about a higher cost of capital and increased capex cost with the crunch in NBFC funding, etc., all the companies which have already put their expansion plans behind them, will naturally stand to benefit more. So I wouldn't be surprised if a Dhampur Sugar essentially gets a bigger bang for the buck compared to some of the others. Today, almost everything is up. But at some point of time, we'll see it in the numbers for a Dhampur, for a Balrampur and some others, because the integrated capacity for a Balrampur, as Avinash rightly said, is already high. So they will probably stand to benefit a lot because they have fairly high ethanol capacities, 360 KLPD as we speak. So should be interesting. I wonder if the chart checks also show that, Devina, if I can take a chart check on some of these. Sumeet Bagadia, would you trade any of the sugar names?
See, a few counters are looking good to me, especially if we talk of Dhampur Sugar. Dhampur Sugar has given a good move today, and the stock, it seems that the stock is headed higher. It has broken the recent highs, which is a positive sign for the stock. I think immediately if the closing is seen somewhere around 179, 180 levels, then there is a possibility that we might see an extended move till 200 or 210 levels. This would be the short-term target, and on a condition that the supports are not taken away. The support is placed for the stock somewhere at around 168, 170 levels. So that means those who have taken long positions, they should maintain the trailing stop loss somewhere around 168, 170 levels, and if anyone wants to initiate a fresh long positions, then that should be with strict stop loss of 168, 170 for the targets of 200 and 210 levels.
Okay. Got that. Let's also take a look at a few other moving parts within the broader markets, and we've spoken about some names like BGR Energy, which is active in today's session. The other stocks that are doing well include the likes of a Diwan Housing Finance. That's up about 6.5% right now. Wockhardt is up about 10% since morning actually, so it's not move that's come in the last few minutes of trade, but it's sustained since morning. And then obviously the likes of a Take Solutions, you've got an 8K Miles, a slightly sketchy name there, Radico Khaitan, Repco Home Finance. Some of these home finance names are not doing all that badly today. Diwan at 247, Avinash?
I think the good part is, Devina, they repaid their commercial paper much before the deadline, and I think that is something which most of the market men are more optimistic about. I think although definitely for them the cost of funding is definitely going to increase in the coming quarters, but looking at the kind of loan book and the quality of clients they service in tier 2, tier 3 markets, I would believe that this is definitely a stock where possibly the panic is completely out, and probably the stock may remain lackluster for some more time. But given the kind of headwinds in the NBFC space, it could take a long time before it could possibly recover, the previous highs.
We just had, Yash talk about how Aditya Birla Mutual Fund is completely exited Diwan Housing Finance. Yeah. Is that something that you envisage more fund houses doing?
So I think clearly the other paper which Diwan Housing has actually subscribed in the short-term market, there are some news reports that possibly at some point of time there could be some liquidity issues. So clearly I think some fund houses are quite skeptical and negative on this name, and I think it makes sense because going forward NBFCs may not enjoy those kind of premium valuations which they used to enjoy in the past. So I think clearly you could find a shakeout in the NBFC space, and clearly for a defensive portfolio, I think it's better to stay away from these NBFCs at least for the near term.
What's doing well today again is Linde India. That one is up about 3.5% at 601, so good show being put up. Wonder what a dredging corporation is up to. I don't see it in my usual list of buzzers, but just bring that stock up. Okay, after having a decent start, correcting a little bit in the session today, 3.5% lower. Yeah, a couple of other names like BGR Energy, for example, are doing well. Actually, 2 or 3 of those results, Avinash. One was BGR Energy. Numbers look strong. I don't know if you looked at them. Yeah. The other one was Avanti Feeds, where the numbers were bad. And we looked at the stock. From the start of the year thus far, the stock has lost 60%. Yeah. There is a fundamental issue in the business right now for Avanti Feeds.
I think numbers definitely, Neeraj, which came out from Avanti Feeds were very, very disappointing. In fact, both on the top line and the margin front. And I think going forward, possibly we could see further erosion in the margins. The US market is one of the key markets for them, and prices for shrimp feeds have definitely come down. So I think you could probably see some more margin pressure coming in. I would believe that even at these levels, if investors are sitting on this stock, they should exit, because overall I think the company has given superb returns over the last 5 to 6 years. But now looking at the kind of business dynamics and the supply kind of issues, I would believe that probably the next 2 quarters are going to be equally bad.
India, obviously, that delisting news that came about Friday is keeping the stock very active. But nonetheless, there is no price that's come about in terms of what exactly BOC India or the BOC group, which holds about 75% in India, is ready to pay. But probably market expecting something more because of the kind of correction that the markets has seen off late. The stock itself has come off. So an expectation of delisting at a higher price could keep the stock a little more buoyant.
For now, definitely looking buoyant. Let's see if this lasts or no. Do you track some of these, NHPC, Linde India, etc.?
No, in fact, Linde India, in fact, our sense is that possibly unless, you get a 40-50% minimum premium to the market price, Neeraj, I don't think any of the investors who are invested here would be willing to enough to, give those shares. Clearly, the stock is a liquid stock. We have not seen much movement in the stock for a long time. So the delisting opportunity was a long time, need. And now that it has come in, I think unless we see a delisting price of anywhere above, say, 650 to 700, I wouldn't be surprised that, they may not be able to, take in all the number of shares and make it a 100% kind of success.
That's interesting because the stock has already moved up. 30-40%. So I don't know how much headroom the management has in terms of giving that kind of a price for delisting. But some of the other names then to watch out for in trade, aside from the stocks we already spoke about, KRBL is doing okay. That's 4.5% higher. We already spoke about Repco Finance. Some of the IT names today are active, and Emphasis picks up pace by about 2.5% at 970. In fact, come to you with this one, Hemen, on Emphasis. The stock has come off very sharply since the time it announced the buyback closer to 1250 odd. The stock came off, sub 1000 right now. What's the expectation? Is it expected to probably pick up at these lower levels?
Absolutely. I think, Devina, we've seen a short-term bottom in place. Some of the indicators have even crossover buys after a hint of positive divergence, indicating that yes, there is a recovery in place. We went to almost 900, the exact level was 905 a few trading sessions back. And we are retracing the fall from 1280 to 905. There's a gap on the daily chart, Devina, a bearish gap, which comes in between 1034 and 1052. So I think this is the level which the stock could come to. Having said that, we've had a run up from 350 to 1280. I think that move is probably in an exhaustion phase. So we are looking at a pullback, but yes, one short-term downside appears limited, 2, the bounce is very much on, and 3, a further upside seems to be like essential.
Interestingly, you might see a significant amount of tendering for the buyback, considering the price has come off so sharply. The buyback price, I think, closer to about 1350. 1350, yeah. So, and the stock's trading at 970 now. So, and the acceptance ratio may look a little bleak, considering the tenders that could go in.
Yeah, should be interesting to see what happens. But I thought the record date was 25th, right? If I'm not wrong, 25th of October. So let's see. I think based on that, the number of people who can do this as well. As we speak, on the index, the other stock that has come off today is Tata Motors. Fundamental news as well out there, but down about 4.5%. Sumeet, Bagadia, if you were wanting to initiate a trade in Tata Motors, will you do that right now?
I would wait for some time because this stock has resistance at around 198-200 levels. I think till the time these levels are not taken away, it's better to wait for a couple of days, because from here on there is a possibility that we might see a small correction in which stock can move down by 10 to 15 points from present levels. We can see levels of around 170 in next couple of days. At the same time, if we see levels of around 170, then one can initiate long positions at lower levels, or if the breakout is seen above 198-200 levels, then one can initiate fresh long positions. Till the time stock is not able to break the resistance level, it's better to avoid long positions. Above 198-200, stock will move to 220-240 in very short term time horizon. So above 200, the stock looks good to me. At present, it's better to avoid.
All right. Avinash, before we let you go, anything in particular that you like to recommend?
In fact, Devina, we have been recommending Cummins to our clients. The company has done very well in the Q2, and I think even in the management commentary post the conference call, I think the management has actually upped the domestic market guidance as well as the export guidance. Our sense is that Cummins is directly related to infrastructure growth, and the kind of projects which are coming up are definitely going to give them a big leg up on the domestic side. On the export side, the depreciating rupee has already helped them, and I would not be surprised that possibly we could see the stock moving into a 4-figure kind of territory. So definitely a good value buy, and from the next 12 to 15 months, this could definitely be an outperformer.
Okay, got that. We'll leave it at that, Avinash. Thanks very much for joining us. Appreciate your time. Well, we slip into a quick break on that note, and in the meantime, let's hear out what Pratik Agarwal of ASK Investment Managers told us earlier today on how he's reading into the existing challenges in the NBFC space.
Look at the lending NBFCs into buckets like small ticket, so two-wheeler finance, gold finance, microfinance, second-hand cars kind of lending. There the duration of lending is not very long. Average for gold loans is 3 months, 4 months. For two-wheelers, maybe 3 years duration would be 1.5 kind of a numbers, and so on. So there, these are extremely liquid books for NBFCs and high yielding. So at a close to 20% interest rate, if you take out 50% of that as cost of doing business, still you can do a 10+% growth on your own money. You don't really need to go to the banking system or mutual funds or NCD route to keep raising more money for growth. Where we see problems is higher ticket NBFCs, which actually compete directly with banks, and since they have issues there, banks in many cases are more competitive. They go into spaces where banks don't usually go, and hence take on higher risks. And of course, very, very strong asset liability mismatches. So that would include, infrastructure finance. That would include housing finance. Housing finance is seen as a very, very safe part with very low NPAs, but on asset liability is not a great part. So the first part done well, the microfinance, the gold finance, the two-wheeler finance kind of NBFCs, CVs, maybe the extreme end of it. We see no issues. We see growth actually continuing. Penetration levels in a large part of this space is low. There is need. There is even policy direction supporting that dispersion of credit into the so-called have-nots of the society. It is in the infrastructure and the housing finance space where there is an issue. There, if the entity is sponsored by a very well-known, good quality, long-standing corporate house, they would have continued access to capital and they would gain market share. Others will have issues. So one more point, over the past 1.5 years, in the buoyancy of the markets, the notions of quality have gotten diluted. Go back 2.5 years, and what was quality then is quality now. What became quality over 1.5 years is suspect. So don't dilute the notion of quality is the small point that I am saying. Any fears that you have will come out true, given that liquidity is not as good as it used to be, and should not be expected to be as good as it used to be. So risks in the systems are definitely increasing. Third, you have the fee-based businesses, insurance, mutual funds, etc. We have a positive there. Low-end penetration, strong inflow seen, particularly in the mutual fund space. And happily, for all the concerns on margin squeezes, the mutual fund industry has demonstrated the ability to pass on the margin cuts to the distribution channel. So overall, the fund businesses have maintained their profitability, or there has been just a small change in prospective profitability versus the earlier understanding. And the growth continues to be very strong. I mean, we just discussed that on a month-on-month basis. The runway is long. The penetration of equity, which is the most profitable of the businesses in a mutual fund, is just about 5%. Even a pension fund has a 15% allocation. So there's a long runway for growth for these businesses. We stay pretty positive there.
Completing 100 years of building beneficial relationships with our customers and stakeholders, Union Bank of India celebrates its 100th Foundation Day and wishes all viewers a very happy Diwali.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, raise? अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, but policy समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर generation की पसंद.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
I'm back with Countdown right here on Bloomberg. In 27.5 minutes left for the markets to shut shop, and we've slipped further. So we're down about 0.8% now, 10,500 under the threat of getting broken down. Now, what's leading to this? Some very interesting movers, by the way. Bajaj Finance is down 4%. If anybody thought that the NBFC scare is out and beyond, no, it's not the case. Select NBFCs are coming under pressure today, and this is, the holier than thou NBFC of them all, but that is under pressure today. Hero MotoCorp and Tata Motors bringing up the pressure in the auto space. I must say Maruti Suzuki 2 at 7122 is down about 2.5%, and Eicher Motors ahead of the numbers, 22,000 odd points for that one. So that one too is looking like being under pressure. Rate sensitives essentially look slightly wobbly in the session today. Hindalco, from amongst other companies, is down about 4%. So that's what's happening at the large cap end of the market. The banks too. The interesting bit is, while banks led the first half of the fall, the last 30 minutes are not led by banks, because the Nifty Bank has just about stayed at the same levels that it was at, but the other stocks have now started to fall apart, and which is why we are now trading 94 points lower at the lowest point of the day. Before we get to Fab 4, I think it's important to just get a quick technical perspective here. Hemen, the view may have been what it was at the start of the show, but at 10,000, slightly sub 10,500, is there a fresh trade that opens up on the Nifty?
The level is 10,490, 10,380. But coming back to your question, does a fresh trade open up? I am not very sure, Neeraj. This is a pullback. I don't think it's over yet. But if there is any grain in the matter that it's over, I wouldn't go fresh long. I would wait a bit. Though I'm not very bearish now. But no, coming back to main question, no, I don't think there's a trade.
Okay. Stay on, Jamin. We'll come back to Sumeet Bagadia's choice on some of the index stocks as well. But time now to get in the list of the Fab 4 stocks of the day. Yash Johnson with that list. Yash, good afternoon.
Good afternoon, Neeraj. It's just one of those days where despite the market is down, I actually managed to get the 4 stocks and some good moves at that. So Saxoft is reacting positively to a bumper set of numbers, an 80% growth in its net profit, 24% EBITDA growth on a year-on-year basis, and margins they have expanded by nearly 200 basis points. So all in all, a good set of numbers, and the stock is locked in a 20% upper circuit. Positive piece of news coming in for Premier Explosives as well. It's up 14% after the company received the approval to manufacture ammunition and propellants at its new facility based in Telangana. Titan, like Agam was mentioning, a good set of numbers barring some one-offs, on the back of which Deutsche Bank has upgraded their target price on the counter to 1100 rupees, indicating a potential upside in excess of 20% from the current levels, as they expect a strong second half for the company. And the last stock I want to highlight is from the sugar pack. The entire sugar pack is doing very well. So something like a Balrampur Chini, that one is up about 8% on the back of heavy volumes. Back to you.
All right, Yash, thanks very much for that. So those were a few active stocks in trade today. Dharmesh Kant of IndiaNivesh Securities is joining us on the show right now. Dharmesh, good afternoon to you. How are you set up for trade in terms of advising clients on what kind of inclusions and exclusions they need to make in their portfolio from a medium to long term?
Yeah, good afternoon. See, I think from here on till the elections results are announced in all the 3 states, the market would be jittery, and this is what we have been seeing. The range of the Nifty which we see is ranging from 10,000 to 10,600. This is the broad range, and from higher end the market is correcting. Numbers so far were okay, nothing great about it on the broader market side. Even Nifty earnings so far is on absolute terms, it has given only 3% kind of an YOY return on the PAT front. Primarily because of all the banks and financials coming out with a certain better set of numbers. Had it not been there, it would have been a negative earnings growth. So again, the story continues that we are not finding the earnings growth, the PAT growth to the range of 15-20%, the multiples which we are giving to the Nifty index for 1 year forward. So that is keeping the pressure on. Crude prices have corrected, but again, it's not enough given the currency headwind which is still there. So net what we have been sticking to is quality names, bottoms up approach kind of a scenario, and we are finding short-term trading opportunities like BEL and VCC. We recommended a few years back on your channel, also I have recommended the same, and today we booked out by making around 20% kind of a profit. Coal India HUL looks good at current levels, so consumption themes should be the focus area along with some private sector banks. Otherwise, I see pressure being maintained on the market.
Interesting. What have you made of the moves, Dharmesh, in Tata Motors today? Under pressure for a number of days, and every time the sales data comes marginally off, Tata Motors tends to cool off quite substantially and on fairly high volumes as well. So great trading stock, but what have you made of the fundamental move?
Yeah, see, as far as the numbers are concerned, domestic side has been doing pretty well, particularly the MSCV segment, but that has been the story with all MSCV makers, be it M&M or Ashok Leyland. The key turnaround for Tata Motors was the JLR thing, and that has delivered the numbers on the console basis. It's still 80% of the top line, and the bottom line entirely comes from the JLR front. But now too many ifs and buts are there. First it was China, which was growing very aggressively a few years back, and now it has slowed down. US, the policy uncertainty overhang always is there on Tata Motors. You can have our taxation policy which will impact the JLR sales in US. And this Brexit thing is not taken lightly, because the CFO there itself, the UK CFO of the JLR, he has clearly stated that Brexit won't be easy for JLR sales, and there would be taxation levies by the other European countries which they sell, be it Germany, Spain, Italy, France. So this concern is keeping, and just balance sheet is very heavy on the debt side, so there is no comfort on the balance sheet. A bit of a 5-7% kind of a sales down in JLR will turn entire Tata Motors into a negative territory. That is what my analysis is on the sensitivity of the volume sales which is there, and it's hanging around. So I think given the uncertainties plaguing the best set of numbers which can be delivered from JLR, it will be more of a trading bet. And currencies, you just don't know what happens, how they hedge the currencies. That is a black box, so it's very difficult to decode at a taxation angle. So too many riders which plague the bottom line of Tata Motors. The numbers were pathetic when they reported this quarter around. So just going by the sales and which is not materializing into the bottom line won't help the cause any longer. So better stay away from Tata Motors. Let this settle down. Let the the accounting policies and hedging mechanism is very clear to the market, so that calculations can be done easily. And then only I think serious buyers will come into Tata Motors. Otherwise, it will keep on dwindling on all the rallies.
All right, that's Tata Motors. Dharmesh, from your stable, what is it that you're asking clients to buy?
See, we have come out with, again, the consumption theme and other stocks which are not, so macro dependent kind of a theme. And there what we found out was like Coal India, a safer bet at the price levels which they are trading to 64, 65. Because we know 10% kind of a volume growth has been there on the production side, and going into the season, the peak season, which is the third and fourth quarter. So this can easily go up to 15% because the power demand, I mean the demand of coal from the power companies has been rising very speedily. So the price comfort would also be there. So that is where even if you give it at 12 times of PE multiple 1 year forward, 340, 360 should be the likely target. So 15-20% can be easily made on that. Hindustan Lever is the other idea which we have been recommending to our clients, came out with stellar set of numbers, and this is likely to continue going forward for the next couple of quarters. So from 2 years perspective, I think they will continue to trade at premium valuations even at 45-47x PE multiple based on FY20 earnings estimate. So 2400 is the target price which comes out. So that is the other pick. The other picks are NBCC, Bharat Electronics, Canfin Homes and RBL Bank. So this is the basket of portfolio from different segments which we are recommending. What we are avoiding right now is automobiles completely. That we are not touching, and even IT stocks, in spite of today upswing because of the currency depreciation, I still think the valuations are not comfortable, and pharma things are not very clear. So there also stock specific Divi's Laboratory or Dr. Reddy's is fine, but otherwise we are avoiding that.
Okay, now before we move any further, I want to get in Sumeet Bagadia's thoughts on a couple of charts here. And the reason I bring up Bajaj Finance is because you don't usually see Bajaj Finance crack 4%, and on a day when not necessarily all the other NBFCs have cracked like this. Sumeet, just purely from a trading perspective, for somebody who doesn't have any position right now, by the way, sorry, actually, before I get to Bajaj Finance, there's news out there. Britannia numbers are out on the screen. Revenues up about 12.8%. The net profit is up about 16% at 303 crores. This seems to be in line with consensus. So our estimates, the Bloomberg estimates were about 305 crores, and the numbers have come in at about 303 crores. On the revenue front as well, the expectations were 2867. It's come in at 2870 crores. So frankly, the poll got it bang on in terms of what Britannia could report. I think that's exactly what they have done. Even on the EBITDA margin front, it's probably in line. 15.7 was the estimate, 15.8 is the actual. The interesting thing, Devina, double-digit volume growth for the 4th straight quarter. And something that I think we were talking about today off air too. I think Darshan was referring this in one of the editorial meetings, that the volume growth has not been a concern for the FMCG names this time around, but somehow the operating line and maybe below the operating line, the numbers have lacked a little bit of that punch that we've seen the FMCG companies do for the last 3-4 quarters. So the numbers have been slightly below estimates, despite the fact that volume growth numbers have looked okay.
Nonetheless, I mean, coming to the fray that these stocks have actually, the kind of valuations they were commanding at one point, and the kind of performances, at least over the last 2 or 3 quarters, that have been coming out from these companies, there seems to be a big mismatch in that.
Yeah, in selective cases for sure. But the only point is, and the volume growth at least, the numbers are looking okay. So that is probably a standout feature. Actually, just before I get to Sumeet Bagadia on those charts, Dharmesh, do you guys track Britannia? The numbers seem to be in line with estimates.
Yeah, definitely. See, this is what I was speaking about, the congestion theme, and this is again reflected in the Britannia numbers, because 10% plus kind of a volume growth when they are migrating into a premium segment is very commendable. So I think this should again be a portfolio buy, and the numbers looks excellent in spite of rising input costs. They have been able to pass on the price hikes to the customers, which have been taken by them, because this shows that products have been selling, the new launches which they have done in the confectionery segment. So what I gather from you, because I have not seen the numbers as yet myself, but what I have gathered, the numbers which you spoke about, this looks to me a very good set of numbers. So again, should be there in your portfolio.
Just a point that while the volumes have come the way they have, I mean, the stock in the last 1 year has given only 17% return to shareholders, and for a stock which someone is ready to pay a premium of 46 to 50 times, the expectation is not just to beat, to meet the street, yeah. But if I'm paying that much, to get into the company, be a shareholder of the company, you better give me something more on the table.
Yeah. Well, I remember a UBS note that had come in, and again something that I think either Agam or Darshan or one of them had highlighted about how they had their target price was substantially lower. From there, the stock actually kept on running. I think the point that you make is well taken, that they need to beat estimates significantly. But for now, the market seems to be happy with even meeting the numbers that the Bloomberg poll had thrown up. So the going is okay right now. Let's see how long it lasts. Now, before we move any further, it's time to take a stock of what dealing rooms are recommending in the session today. Darshan is here with his channel checks. Darshan, good afternoon.
Yeah, good afternoon. And just, it was UBS on 2 companies which they were anti-consensus. One of them is Yes Bank. Second one was Britannia, in which it kept on moving up and ultimately it came down. But a couple of counters in which dealers are indicating that there is positive traction. Gujarat Fluorochemicals, there's a buzz of a potential corporate announcement that would come in. It's moved up today, up 1.5% on decent volumes. So that's something that I'm keenly watching out for. Sugar as a pack is doing well of late, counters like Balrampur Chini, Dhampur Sugar, all of them are doing well. Some of the HNIs are actively accumulating sugar stocks. Balrampur Chini being the largest one, debt-free company, cash-rich company, has a power generation business, so better off the others as per some of the HNIs. And L&T is something that dealers indicate hasn't moved up much, but at lower levels, some of the domestic mutual funds have started nibbling into L&T. So these are the stocks that dealers are talking about.
Well, we'll watch out for these. Darshan, thanks for putting those into perspective. So 2 or 3 names. After a while, I've seen Gujarat Fluorochem emerge in the list of names that dealing rooms would be talking about. Interesting moves there for that stock in the session today. Now, for the time for the chart of the day, then we also get in closing strategies and then maybe some fundamental investment ideas too. But NBFCs have had a rough ride in 2018 thus far, and liquidity concerns have only added to their woes in the last few months. That understandably prompted foreign investors to pull out from some of the big names in the NBFC space. But there is one that's managed to hold on for at least now. Sharad Dubey is the answer for the chart of the day segment. Sharad.
Yes, Neeraj. In the last 1 year, PNB Housing Finance foreign portfolio investment has increased by, from 14% to around 18%. So if we can check the chart of the day, we can see over here, over the last 5 quarters, how it has increased. And it has gone up almost to the 18% levels. Apart from this, we see HDFC has actually been having a plain level with a marginal decrease in the 5th quarter. Overall, if you see all the 5 housing finance companies which we have taken in terms of high market capitalization, we see the FPIs have been actually pulling out. So there has been a stark contrast which we have seen. So Bloomberg Quint had an interview with the management where they told that the redemption pressure is actually less for the company, and apart from that, they are having 0 finance NPA for their housing finance sector. Apart from this, Investec Securities feels that this company is having a very good liquidity position by around having 7,500 crores worth rupees of commercial papers as well as external commercial borrowings being raised after the September. This is the chart of the day.
Well, thanks a lot for that, Sharad. The interesting bit also is that they managed to refinance or some of the CP that was coming up, and from what I remember,
3,000 crores.
Yeah, 3,000 crores.
2,500 to 3,000 crores, I think.
Okay, maybe the number, I thought the number was slightly higher, but whatever the number be, it was a large number, and I think they mentioned that the near term, the 3-month, 6-month maturity CPs were refinanced at about 8.25, and that was a favorable rate. But of course, shorter term, the longer term would have happened at about 9.25 or thereabouts. PNB Housing Finance up about 3% in the session, but I must say it's had a it's a bit of a torrid time in the last couple of months, as have some of the other NBFCs. Bring up the 3-month chart of PNB Housing Finance, you'll see what I'm talking about. It came off quite rapidly, 24% down. But as I said, that would happen to probably the best of NBFCs. A clutch of others have actually corrected 50% as well in cases like, say, Edelweiss or IFL Holdings. So these names, PNB Housing Finance has done reasonably okay for itself. Dharmesh, any coverage on PNB Housing Finance?
No, sorry, Neeraj, we don't have a coverage on PNB Housing Finance as of now.
No.
But yeah, housing finance companies or any NBFC, would be in a spot because of the rising yield, and this is going to aggregate further because still I think this ILFS thing is not over and many more to come. So this is my assessment of the entire situation. So things will worsen rather than getting better from here on.
Okay. 3:20 before we get in closing strategies. We've been meaning to go to Sumeet Bagadia for a view on those NBFC stocks for a while. Sumeet, you want to come in? A Bajaj Finance or a PNB Housing Finance?
See, Bajaj Finance has given a breakdown. The selling is heavy on charts, and it seems that the some more downside can be seen from present levels. 22.75 is the current market price. Bajaj Finance looks weak till 2200 or even 2180 levels. Those who have taken short positions in Bajaj Finance, they can hold on the existing positions with a revised stop loss to be placed at around 2330 levels, and one can initiate fresh shorts with the same stop loss 2330 on higher side for the downside target of 2200 and 2180 levels in next 2 to 3 days time horizon.
Okay, let's get in closing strategies. Sumeet, I'll stick to you first. Your top closing strategy.
Well, we have seen a sudden sell-off in the index, and the index is trading below 10,500 levels. Now, looking at the index, there is a possibility that we might see some more sell-off in a few stocks, especially metal stocks are looking weak to me. Hindalco has given correction and it's trading below 200 DML levels. So one can initiate sell positions in Hindalco at the 229, 230 levels with a stop loss to be placed at 234, 235 on higher side for the downside target of 220, 218 levels.
Okay. Hemen, what about you? Your top closing strategy?
Neeraj, it would be a sell STBT. Either a STBT on a UPL or a STBT on a Aurobindo Pharma. I think STBT on a UPL, Neeraj.
STBT on a UPL and a Aurobindo Pharma. Sorry, Hemen, so which is the top idea? Is it UPL or is it Aurobindo?
UPL.
Okay, UPL. But of course, I think Hemen's reluctance shows that he actually wants to maybe have a strategy at both the ends. Do watch out for these names as well. HPCL as we speak is down 7%. Hero MotoCorp has corrected about 4% as well in trade today. Two-wheelers certainly in a bit of pressure. Eicher Motors ahead of the numbers, down about 2.5% too. A bit of a problem there. Would you use these dips, Dharmesh, to buy into any of the two-wheeler majors, either a Eicher or a Hero? You could even be liking a Bajaj Auto.
Not really, Neeraj, because I think the slowdown which is there, first is, the base effect of number of years, 2-3 years of a good year we have seen for all the, passenger cars as well as two-wheeler segments. So that is going to play out for the next year. And secondly, the numbers have already started, dwindling. We have seen that Q2 numbers were not great, and Q3 numbers so far, the numbers which have come for October sales was not very, gung-ho. Input costs will be high. Most of the companies are debt free, so interest burden won't be there, but raw material pressure will be there, and pricing they are not able to pass on. If you go with the dealer check, if you do, they are still offering discounts rather than trying to cope up with the input costs. So that is going to eat into the margins. I don't think this is a time to, buy two-wheelers. Maybe 2 more quarters, you should let it go by. And then we will see at the beginning of the new financial year whether one should be investing into these stocks. So more or less a trading play and with more downsides in store. So I won't be touching any of the automobile stocks for next 6 months. As of now, this is my assessment now.
Yeah, I think it remains a fluid situation. It's always good to give the disclaimer that as things stand, Dharmesh won't be touching any two-wheeler stocks. So Dharmesh, good having you. Thanks much for taking the time out and being with us today and giving us your thoughts. Appreciate your time.
Thank you.
Okay, just about 4 minutes left before, actually 7 minutes left for the markets to shut. 4 minutes left before we wrap up. The index, 400 points lower for the Sensex, 34769. The Nifty Bank, and remember in the morning we had presented this chart of how the Nifty Bank was approaching the 200-day moving average from below. It was going to hit that resistance zone, and with that 1/4% or 0.5% uptick in the morning, the Nifty Bank would have been around that resistance zone. It's found that resistance, hit that resistance, and has come off. So there is a bit of a trade issue there. We haven't quite discussed the Nifty Bank today. Been centered around the Nifty and the Sensex. Hemen, come in on the banks and the Nifty Bank or any large banking name that you would believe could have lower levels.
Meera, this is the 6th trading session in a row for the Bank Nifty, and we've been range bound. It's not exactly a small range, it's been almost 300 points, 25,500 and 25,900, that's 400 points. Today we have given a downward bar reversal. I'm assuming, okay, even with the adjusted closing, it would still remain a downward bar reversal. So at the risk of sounding slightly ominous, is the pullback over? Possible. But it's a bit too early to jump to the conclusion. Having said that, if this has to exacerbate some more, I guess we need this level to get taken out, and that level is 25,465, Neeraj. If that goes tomorrow, I don't think that happens today, it goes tomorrow, then I think it opens the floodgate. So there could be a pullback over, there could be a small move before it continues a bounce, but frankly speaking, difficult markets, maybe it's political overtone, maybe crude bounces back, maybe dollar bounces back, but dicey, there's a negative bias as of now. I don't know whether it's going to remain for how long, but 25,465 breaks tomorrow, 10,380 breaks, that's in closing for the Nifty. I think it's all over for the time.
Two stocks that I want to talk about and probably come, one each to both of you. Before we start wrapping up the market, the first one I want to talk about is the Cummins India. The stock, at the start of this month on numbers saw that big gap up opening and then a good pricing action post that. It's comfortably trading above that 200-day moving average. But still, if you have to go to see from highs of about 1,000, which it was at in the first half of the year, it's considerably lower. Is there a possibility, Hemen, and I'll come to you on this one, that this one takes down the high of the year?
High of the year, possible, but well, yes, technically standalone. If I were not to correlate Cummins to the market, yes, I think that is a possibility. It's posted a higher top, higher bottom on the monthly chart, Devina. Monthly MACD is on the verge of giving a buy. On the verge because the month is not yet over after almost a year. So we would tend to take that seriously. And 800 is important. We are at 796. We need for 800 to sustain decisively. But yes, it's a possibility. It looks good, but I don't think it will swim against the tide because I am very reticent and doubtful about how the Nifty is going to pan out. So I'm not sure if the Nifty breaks or implodes. I don't think Cummins standalone will swim, but if, in a positive market, what you said makes a lot of sense. Technically, it's done, it's made a base, it's done whatever it has to push, it's going to go up further and further.
Got that. 2 minutes left. Sumeet, I'll quickly come to you with Adani Power stagnating in that range of 48 to 50 over the last few trading sessions. Do we see a break up or a breakdown from here?
I think breakout will be seen once the stock is able to break 51 levels on higher side. Till the time these levels are not taken away, there is a possibility that we might see some profit booking as the stock is given a very strong move from the levels of 33. So some profit booking can be seen. From here on, there is a possibility that we might see a move till 45 or even till 43 levels. I think a fresh breakout will be seen once the stock is able to break 51 on higher side.
Okay, gentlemen, stay on. We quickly wrap up the markets, and 1% lower. I don't really need to add too much because we've been talking about this. 1% lower for the benchmark indices. The mid caps and the small caps will come up on your screen. While the start may have been, well, reasonably okay, I think under pressure during the course of the day, so about 1% lower. No alarm bells, but certainly coming off from key resistance levels. Let me quickly look at the large caps, and then we'll bring you up to speed with what's happening in the mid caps as well. Titan shining in the session today, about 6%. Tech Mahindra, HCL Tech, Infosys bringing up the IT bandwagon, and some strength for a Kotak Bank in the session today after losses on Friday. But look at the losers. All marketing companies being taken to the cleaners, 7%, 4%. BPCL in this list too, somewhere down below. And autos, Tata Motors, Hero MotoCorp, Maruti out here under pressure, and Bajaj Finance from the NBFC space looking slightly wobbly, and metals at chalk and cheese behavior. Tata Steel in the green, but Hindalco and Vedanta trading in the red. So, well, a clutch of losers out there, and no specific sector, but rate sensitives by and large under pressure in the session today. Is the scene same in the mid-cap space, Devina?
Actually, Neeraj, we've got the bears weighing down on the bulls within the broader markets. I'll quickly run through some of the names now, starting off with the gainers actually. So while the indices are down 1%, pretty in line with the benchmark indices, there have been stocks which have outperformed. So I'll start off with the Walkhard, which does well. Stocks are going to be ending the session with gains of closer to about 8.5%. Future Retail is the other one that's seeing gains in today's session, followed by BGR Energy on the back of good numbers. Future Retail, the last few minutes of trade saw a good move. BGR was up. Saxoft is the other one on results, which is up 20%. PNB Housing, the name that given you right now, at least the stock closing in on 3% gains. Emphasis, after seeing 2 or 3 straight days of gains, once again clocks in a good move, 2.5% higher. Tata Global and Cummins India are some of the gainers in trade. Amongst the bigger losers, we've got the likes of Bank India. Most of the banking names actually witnessing fair bit of pressure in today's session. Dalmia Bharat is the other one that looks weak. Union Bank sees some amount of pressure, selling pressure building up. IIFL Holdings loses out some ground in today's session. That's Union Bank down 4.5%. IIFL is down 3.5%. Canada Bank, Indian Bank, and 2 other names there. TVS Motors looks weak in trade, and Adani Power gives up some steam by the end of trade today. So nonetheless, while you have the benchmarks doing what they're doing, the broader market is not left out. You're seeing equal amount of selling pressure out there.
Yep, there's a fair bit of pressure at the broader end of the spectrum too. And just bring up the trade stats now. Firstly, the turnover should come up on your screen, or we could even get what's happened to the market breadth. But let's start off with the turnover. The cash market turnover not that high. Actually, even the FNO turnover marginally sub. So the first full day, really meaningful day of business post Diwali, and the participation has been rather low.
Actually, Friday's session also, Neeraj, if you remember, the number was abysmal in terms of the NSE FNO number, even the cash figures. Lot left to be desired out here.
Yeah, so the turnover not the best. The market breadth on expected lines worsening during the course of the day, and almost closing at the lowest point of the day. So not the best market breadth either. I'm no surprise that the contributors list would have some rate sensitives on the losing side.
HDFC Bank, Reliance and HDFC. So the top 3 Nifty contributors all make their losses pretty pronounced, and you're seeing that in that 126-point cut that the Nifty has seen. Amongst gainers, Titan, though having the largest gains in terms of percentages, in terms of point contributors, doesn't stack up there to probably uplift the index in a meaningful way.
Yeah, Kotak Bank might have done ever so marginally, but yeah, when you have HDFC Bank, the HDFC Twins and Reliance
you
in
can't
the red,
battle that.
It's very, very difficult to battle that. So yeah, not the best of days for the index, and the market went worsening during the course of trade. The only question is therefore, and a bit of a repeat as to what does this do in the near term. Now, gentlemen, we've spoken to you about what your index views are. Hemen, in light of the kind of correction that we've had today, again, don't want to really bring about alarm bells, but what kind of trends do you see in the mid cap and the small cap indices in the near term for the rest of the week or for the next 5, 6, 7 days?
Okay, Neeraj, we look at the Nifty Midcap 100. I think it is mirroring the sentiment of what the market has done. It's given a downward key reversal. It's faced resistance from the 55-day exponential moving average. So, like you mentioned, this seems slightly abrupt. The recovery might not be over, maybe over. I frankly speaking don't still have a view on that. But yeah, you're right. It could be ominous. It could be the start of a unraveling. Too early to say, but very cautious on either side, but it still seems like a correction. And if you look at the small cap also, Neeraj, I think it's a very similar sort of view, but the small cap is weaker than the mid cap index, Neeraj, if I were to sort of go there. But same story, downward key reversal coming in, pullback, sustainability seems suspect.
Right. Sumeet, some closing thoughts?
See, I was not expecting that Nifty will close below 10,500 levels. Now it has given the closing below 10,500 levels. There is a possibility that we might see some more sell-off, and we can see a fall till 10,420, 410 levels. At the same time, if Nifty is able to break 10,550 on higher side, then we will see upside move. Now till the time upside resistance is not taken away, we will see Nifty in the range of around 100 to 150 points. 10,410, 10,400 on low side to 10,550 on high side. At the same time, Bank Nifty has closed above the support levels. So now next 1 or 2 days will be crucial because if Bank Nifty breaks the support, then there is a possibility that we might see a fall of around 200 to 300 points in Bank Nifty and approximately 80 to 100 points in Nifty. And if by chance the Bank Nifty gives recovery and move upside move from present levels, then the same can reflect in Nifty also. So it's better to play with support and resistance levels, and it's better to play intraday for next 1 or 2 days.
Okay, gentlemen, leave it at that. Thanks so much for taking the time out and being with us today and guiding us with your opinion, valuable opinion, I might add, Hemen as well as Sumeet Bagadia. With that, it's a wrap on this edition of Countdown from Devina and me and the team that put this show together. Thank you so much for watching.